Now let's talk about indecisive candles, and they are also known as non-directional candles, or most people they call it consolidation, or even some people they call it constraint in liquid. And these are the groups of the candles that we are going to talk about right here. The groups in this part right here. So there are five candles, and these candles, the names, well, we can call it small doji. This one we can call it fat doji, doji box, small doji box, or some people call this long-legged doji, or even rickshaw man. And yeah, these two are the same actually. So and the colors in these dojis doesn't really matter, whether it's red or green doesn't really matter, right? So the entire candle body tells us the sentiment. So how does this work? Now let's say for instance the long-legged doji, how it is formed. Well, let's say for instance this is the price opening, then you have a candle starting to form. At first, let's say if it goes down, couldn't go down any lower. Let's call this a low, then goes up, forms a high, and then gets rejected by the bear and goes back to the opening point. So the close and the opening point is almost the same for this kind of candles. So what we can say is that a lot of people say that this kind of candles, indicates there's doubt in the market because the bulls, the bears that attempt to bring the price down did not control well in their session, and the bulls start to bring the price up, and they as well get rejected also. And then once they get rejected from by the bears, then the price closes near the opening area. So nobody wins and lose. It's a draw game, I would say. So we call it doji. So sometimes it's people say doji is also confusion, not just doubt, right? So now just now was what we saw a long-legged doji, and here we have a small doji. So let's say small doji prices move in a very small movement, and it's either the bulls and the bears. Either side do not even participate, or either side strongly pushing against one another. So price movement, price is finding a very hard time to move either ways. So both of them are like it's not tug of war, but both of them are blocking. Let's say the bears are blocking up here, and the bulls are blocking the price from going downwards. So it is constrained in liquid, what we can say. So both sides are highly liquid and preventing the price to go either way. So now here's an example of a real candle in the day session, what happens within a doji. So let's say we start off with the opening price right here. All right, so here is actually even at the start we can see spikes up and goes down. So now we can see that the bears and the bulls, they fight very aggressively on one another. Okay, first the price makes an up move, then down move, up move, down again to the opening price, becomes a support level, goes up, and then gets rejected. All right, forms a high, couldn't go any higher, gets rejected. All right, forming some bearishness, comes back to this level, it forms a resistance, goes down again, tries to go up the resistance again and gets rejected. So at the final, almost the final part of the day before it closes, the bulls tries a last attempt to bring the price up, breaks the key resistance level, and the bear starts to try to push it even lower and ends up very close to the opening price. So what we can see here is that there's huge volatility within the price movement. It goes zigzag all along the day, and it ends up being nowhere in this entire session. So that's one. Then the second one, what we can see is that the price range is very small. So it starts by opening price here, right? So then forms a bearish candle. The bear starts to push it down. Bulls tries to bring it up again, forms a green bullish candle, gets rejected from this high, goes down, again forms a bullish bearish candle, sorry, bearish candle, and forms a low, goes up again, forms a green bullish candle, and closes near the opening price. So here we have a small doji, and what you can see is that again, not like a powerful candlesticks that go either direction last time I presented, but these are candles that you can see they either go huge zigzag directions or small zigzag directions, and they end up closing. They end up forming candles that has no direction at all. Nobody's in control at this moment, right? So now, and they appear in charts. Let's say this is Microsoft, and they appear in ranges of price that is actually ranging, and or we call it consolidation, and they are very small in relative to regular candles. So they're twice or three times smaller than regular candles. So let's say this is the regular candle, and this is just 1/4 of the size or even 1/3 of the size of regular size candles. So you can see they are actually formed in clusters. So they span like in stock market, most of the time the price spans about around, in my experience, if it is around 70% of the time going sideways or consolidate before it starts to make a big move up. So as you can see, the price, okay, let's say for instance, this is the resistance and this is the support right here. And you can see there's many of these candles forming within this non-directional candles forming within this consolidation. As the price breaks out, then it starts to continue the trend. Okay, so one can say, and here we have more examples. Now we have longer candles shown here, and also mixed with smaller candles that the price is actually moving in a range right here, bouncing up and down. And here, of course, I couldn't circle all of them. Uh, you could see of most of them are formed within some clusters. All right. So yeah, they are very, very common in charts, this kind of small candles. Right. So, okay, I hope you enjoyed this video. Happy trading and investing. Striker X here, signing out.